Bitcoin decided it didn't like the look of the neighborhood around 9,000, and it determined that it deserved the penthouse suite up around the $10,500, $11,000 region. Meanwhile, the entire Alta USDT pairs look around like, can we go yet? Can we go yet? And the entire market clamors for a recovery. I mean, everybody calling for a recovery. So what's the right move to make? We'll break it all down in today's exciting episode of Breaking Bitcoin. Welcome to Breaking Bitcoin, recorded live for you in the studio today, Thursday, July 18th, 2019. Foul year of our Lord, your daily source for market updates, sentiment, and news for cryptocurrency traders. My name's Justin Wise, the analyst and senior mentor at KrakenCryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching the show from across YouTube, Twitch, DLive, Facebook Live, or on Roku at the Investor News channel. If you guys want to support the show, make sure to subscribe, follow, share, and engage in the live chat. And for you YouTubers, there's a thumbs up button there. Highly appreciated. So, hope you guys are doing absolutely fantastic. Of course, today's episode is brought to you by the Kraken Cryptocurrency Premium Trading Group. If you guys would like to learn how we trade, if you guys would like to use our tools, would like to learn our rules, and would like to push your skills to the next level, you can go over to premium.krakencryptocurrency.com and see what we have to offer. So, we've got a fantastic show for you guys today. We've got a lot of fundamental things to talk about. It's always interesting where I prepare a show full of interesting fundamental segments to talk about investing, to talk about economics, to talk about psychology. And then we just have a very, very exciting day in the market full of high volatility and high volume. So we're going to break that down. We're going to bisect today's show into what is going on in the markets and into what I think is more important for traders and investors long term, which is understanding the fundamentals, being planned for the long game, understanding how to generate returns over time. And I think the big problem with most individuals, and I feel like I sound like a broken record sometimes when I just talk about trading mentality, is that I was just having a great conversation last night with one of our students about about the long game, about the long plan for trading professionally as a cryptocurrency trader. And that is to have the long plan, to be prepared for the long haul, to plan 10 years in the road, to plan 20 years in the road, to have a plan for what you're going to do, to be diversified no matter what the market does, to look at your trading as a form of active income. You know, professional trading, I get this question a lot, I guess, too. And it's going to happen anytime somebody like myself probably puts himself out there. I'm a professional trader. I trade for profit. That is my active source of income. The space is awash with individuals that it's awash with. So I always get questions like, well, like every time the market's going to move? Absolutely not. This is not a get-rich-quick scheme. Trading is not a get-rich-quick scheme. The problem with trading is that the only stories that people seem to have heard about trading is, I went super long or super short, like $10,000, $100,000, and I made $8,000 in an hour. I mean, that can happen. Yes, it's happened to me. Things like that have happened, but that is not real trading. Real trading is looking at trading as an active form of income so that you don't have to work, right? So if you're looking, you just look at whatever you need to replace your active income. So for example, this is generally going to range from anywhere in the audience from between $2,000 a month if you're living in the US to $4,000 a month to maybe a little bit more. That is going to be an average. That is going to be an average income. And you look at what rate of return you're going to need per month or per year to return that, looking at your trading strategy and back testing your trading strategy and seeing what your P&L is. And then you get the correct amount of capital to put that on. Now, obviously, if you have access to leverage, you can do this with less risk or you can do this with less capital. So there are, trading professionally or trading for an income is an absolute possibility. That is really, really loud. Let me turn that down, baby. GL, there was a lot of numbers there, man. There was a lot of numbers there, and I'm going to try my best. Let me bring open Streamlabs and my activity feed. I'm going to say it's Gladiator. I'm going to try Gladiator. That's probably wrong, but thank you so much for the support, man, and following over there on Twitch. Anyways, let's get right into the live scene, guys. We're going to start off today's show, as we always do, by tipping some crypto. So yesterday's video, no fancy thumb yet, but you know how we do in the audience. We know how I do in the studio. So yesterday's show was a really, really good show. The United States government affirmed no to Libra coin. We went over the House of Representatives meeting. We talked a whole lot yesterday about psychology, about mentality, about what it takes to be a professional trader in the long run. So make sure you guys go check that video out if you have not. 14 unique comments. So we're going to randomly pick a winner as we always do. Best of luck. All right, cool. Actually, this is interesting. So Adam Borokowski. Now, I'm not going to read this entire thing because this is actually going to be a segment later in the show. So Adam left this And I don't know this individual, so just not exactly sure. But this is a very, very, very long comment asking some fundamental questions about altcoin investing, I think is where it tends to focus on. And then common psychological dissonance that some people have, or cognitive dissonance that you tend to get with the wide preponderance of individuals who are considered influencers or public people in the cryptocurrency space. So shout out to you, Adam. If you want to get a hold, or if you get a hold of me in the Discord at 5696, Justin Wise 5696, I will tip you some crypto. We give away crypto every single day on this channel. If you guys would like to participate, all you have to do is leave a comment at the end of today's YouTube video. Could be anything you want, and I will tip you some crypto if you win. So congratulations to you guys. Best of luck. Adam, I'm going to answer your questions in a segment later on in the show. So stick around and we will get to all of those questions. Now, getting over into the live scene, let's just hop over here. Did some premium trading group updates. So I am so you guys know, for those of you guys in the group, I'm refactoring a lot of the code for some of our tools and adding features and adding improvements based on user feedback. So I just recently finished with completely rewriting Quadriga position sizing and also rewrote Quadriga ATR. Those are tools that we use every single day. Quadriga ATR now does a lot of extra stuff that people had asked for, and I've also refactored the code so that it's just cleaner, more efficient, more functioning, compiles faster, just all the good stuff that we're going to be doing with code updates. And QPS I transformed because now that Quadriga ATR is doing a lot of those features, QPS now serves as a mobile device, as a mobile app, basically, as a mobile indicator for when individuals are trading mobilely. So it sits as an underlay indicator very conveniently on your screen, tells you exactly what your risk is, tells you exactly what your position size should be for any trade that you're going to have on your indicators in your top panel, because you can't open up the data window on the TradingView mobile application. I know a lot of guys want to trade mobilely, and that's absolutely fine. We've got all the alerts set up, so it's so you can automate the entire system if you so want. I know some guys have, especially on the 1 hour and the 4 hour. But again, we teach individuals how to trade. We give them the tools and we show them the rules, and success comes out the other end as long as they follow the rules and use the tools. So, anyways, Elijah Finch, good. Much love to you, man. Gladiator. It's a Pokemon nickname. Right on. Got you, man. Like button wrecked. All right, you guys are awesome, man. So let's get right into the TA. Let's look at Bitcoin's price. Obviously having a big 4-hour candle, big 15-minute candle, just some big candles all over the place. Again, Bitcoin deciding that it didn't like the vicinity of the $9,000 region and deciding to push to the moon, as well as pretty much most of our major USDT pairs as well. So let's just minimize this. Let's just look at this through the major time frames. Obviously, we'll start on the daily. Now, what are we seeing on the daily? We obviously see price closing below the secondary baseline, as we talked about yesterday, and today having a big, nice rally back up to the primary baseline. So this is pretty indicative of future movement. Now, if we look where Minx is going to take a while for us to actually get a long signal on the daily, right? We can see that Wada explosion is still bearish, not confirming a bullish movement or a swing movement on the daily time frame, right? Because when we take a trade on the daily time frame, that's going to influence where our take profits are and where our stop losses are. So if you're taking an hourly trade on something like Bitcoin, your take profit might be $100 away, it might be $125 away. If you're taking a daily time frame trade, well, likely your take profit's going to be, closer to $1,000 away. As we can see, the first take profit, if we were to initiate a trade right now to the upside, would be coming in around 11.5. Okay, so that's pretty significant, given that we are trading not too far from that area, around 10.554. So anyways, let's take Quadriga off for just a moment and look at price, look at our indicators. Again, price coming back up to the primary daily baseline, has not crossed above the daily baseline. The daily baseline is the delineation of trend. So although this is a nice movement, and congratulations to everybody who was able to catch it, I know some guys in the group jumped in. It's not anything really to call home and get excited about. What you need to see with a movement is a trend. You need to see enough movement. You need to see enough levels of resistance be broken to initiate a trend. So far, I don't see anything than a pump back up to our daily trend line, to our daily baseline, which we have not yet conquered. So now we'll watch. We'll see what the selling looks like. We'll see what the take profit looks like. And then if there is enough buyback to generate a sustained secondary leg of this movement, then that is something that we can talk about. That is something that we're excited. Looking from this time frame, obviously there's going to be opportunities. We'll go down to the lower time frames and show you how PTP would have caught this if you're looking at the hourly, if you're looking at the 30, if you're looking at the 4, whatever, what have you. But on the daily time frame, we still have an overall bearish market, guys. We are trading below, We are trading below, obviously, our highs. We have put in 2 consecutive lower highs, looking for another lower high to be put in. We have formed 3 consecutive lower lows as well. This is a downtrend. It doesn't really matter how quickly you backpedal back up to your zone of contention, to your zone of resistance, to the zone of bullish control, or to the zone of bearish control, which is going to be the trend line when the trend is bearish, the baseline. All right, I'm using these terms interchangeably, so hopefully you guys are keeping up. And again, the volume is fairly unimpressive. This is nothing to write home to mom about. When you see big volume come in at the end or beginning of a trend, that generally is what's going to end the trend. When you see a fairly volatile movement occur on low volume, it is just that. It is high momentum without volume, i.e. it doesn't have a lot of staying power. Now, is this a situation where if I come in tomorrow and we're up at 12,000, where that's any kind of reason to be worried about? No, because again, you're going to get that signal on any lower time frame that you want to trade on. But when you're looking at the daily and you're taking daily trades, which are going to be compendiums and going to be your primary strategy, because again, your primary strategy from my philosophy of trading is always to have larger directional positions put on in the direction of dominant trends. That allows you to manage your allocations fairly well. It allows you to be hedged. It allows you to be short when Bitcoin's price is bearish. It allows you to be long. It allows you to be taking all the profits and the appreciation to the upside when Bitcoin's price is bullish. Now, this is a situation where this is just a trade. This is a intraday, shorter time frame trade. And again, a lot of opportunity there, quite a bit of momentum. But it does not change the fact that this is not a trend initiating movement, that this is not a trend ending movement, and this is not a strong positional base to place a positional trade off of on the daily time frame. So this is not a good swing trade setup for a trade to the upside. In fact, from my experience, and again, it doesn't really matter if we're right or wrong because every moment in the market is unique, but just based on statistical probability, since we have shifted into a bearish market structure, this is a retreat back to a level of previous support, which we expect to turn into resistance, however you want to look at that. Obviously, we're using the baseline, but delineating here, obviously, we can see support. I mean, this was where Bitcoin bounced after its initial rejection from 13th. Actually, it ran all the way up to about 14,000, 13.92, but pulled back down to form this level of support, held the tertiary baseline, as we can see, made a weaker up thrust on lower volume, as we can see, decreasing volume on the way to the upside, formed its first lower high, and then broke the baseline, continued on to the downside, closed below the secondary baseline. And just as I said, when we get a big volatile movement like that, a retreat back to a zone of contention, a level of support or resistance, a level to the baseline, or a retreat to the baseline is a correction. It is not really anything that is to not be expected, right? So it doesn't really surprise me. Interestingly enough, we are getting a take profit short signal on the daily. So anybody that would have put on a short from this level right here would have an indication potentially at the end of the day to close out their short in profit if it is a full risk short. However, since we are still below the baseline, this is still a situation in which you want to be sitting in cash or hedged. Now, again, if we get a nice trending signal to the upside, then that flips and we go long, and that's just how it is. We let the market, we let our indicators tell us what to do and not what our subjective feelings are, especially, again, you kind of get the run of the mill if you run over to Twitter or you run over to Discord or anywhere else. You get the run of the mill where people are like, hey, man, I missed this movement. I should probably go long now, right? Well, no. Or, hey, man, I caught this movement. I'm going to hold on to this position. No, man, this is a situation where if you caught this movement to the upside, you're at a daily level of resistance. You take your profit, you move your stop loss to break even, and you wait for a nice, clear trending signal. Because right now, all this is a pullback, is a correction in a bearish market structure to a level of resistance, to the level of contention, to the zone of fighting between the bulls and the bears, which is always the baseline, because the baseline delineates trend. If you want to look at it from a price action level of analysis, then we're talking about a level of support turned resistance. And you don't initiate a trade entering into a zone of contention. You wait for the battle to be figured out, and then you go with the dominant winner. So if the bulls break price to the upside and we close above the baseline and we get a nice trending signal, then the bulls have won and we go to the upside. If the bears maintain control and they reject price from this level, as would normally happen, is more statistically likely to happen in a bearish market structure, then you're happy to hold your short open. So I still remain hedged, still remain in cash. All this is quite nice. Out of my full risk, ended up hitting the stop loss on take profit 2 of my full risk short. So closing that trade out at about 20+%, about 22%. ROI I made just on that trade. That was a full risk position. So that's quite nice. So again, making money on the way to the downside. We took Litecoin to the upside last night. That trade, again, the people ask me, is this pump fake? I actually think the dump down. So if we go to the lower time frames, we'll figure this out. Let's go down to the 12. Let's go down to the 12. And again, 12-hour right here is trading above the 12-hour baseline. Wadatar is still bearish, so it's going to be keeping you out of any long trades at this point in time on the 12-hour time frame, coming up to the tertiary and the secondary baseline and rejecting from that level of resistance. As we can see, we got multiple take profit short signals on the 12 hours, we can see. So definitely right here, which is nice, getting you out of a take profit short, getting you out of, or telling you to take profit on your short, which is good because then price had a nice movement up to the primary and tertiary baseline, about a 10% movement very, very quickly. So there's that. Let's go down to the 4-hour time frame. The 4-hour time frame, again, lagging behind, missing this movement to the upside. This is the movement that I think was false. This is obviously fabricated. If you guys look, this movement to the downside was merely to grab liquidity. Again, we got BitMEX open, and you can, I don't know if you guys know this, but you can right click on your BitMEX chart and you can click enable liquidation displays. Okay, so you don't really need to go over to something like, you don't need to have Twitter feeds. You can get it right all there on BitMEX. It's going to display liquidations in real time as they're occurring, right? You just right click the screen, you just right click your chart on BitMEX, and you click enable liquidation displays. Okay, you can also enable position displays. There's all kinds of information that can be displayed on the TradingView chart, or excuse me, on the BitMEX chart. So that's always helpful. You could see the liquidations roll in to the long side as price made that fabricated dump down to the downside. It was a liquidity grab, and then price pumped to the upside after getting filled on that liquidity. The traders who were moving the market knew exactly what they were doing. They grabbed liquidity and they took price to the upside. So again, for a trend following trader, this was not your trade, at least on this time frame, at least on any time frame you've looked at. And not catching a trade does not make you not a good trader. You need to have a very specific edge in the market which you can exploit. Not every single trader needs to be trading a little bit differently, because every single trader needs to have a particular edge in the market. Now, PTP explains exactly how to derive a system where you can determine your own statistical edge, and then we teach the discipline necessary to stick to that system and hammer that edge over and over and over and over again, and not deviate from your system, right? Because again, I was talking to a member last night, and he said, I was doing, once I don't get to do it with every single member, but I definitely like to do trade reviews with the members and ask them, hey, let's look at your trade journal. Let's take a look at where your wins are coming from, where your losses are coming from. Let's go over your strategy. What have you built? Show me your statistics. Show me the numbers. That's all that matters, is the numbers. Let me see your numbers. Doesn't matter if you just made $1,000 on this trade. Show me your trading journal for the last month and show me what your consistent rate of return is, right? That's what matters to a trader. Your consistent rate of return, your consistent ability to generate profits. So, for example, there are movements that you're going to miss because that's not your edge. i.e., this is a very important concept I want people to understand because I get this a lot. If you miss this trade, then that was not your trade. And trying to, and just because you see a big candle is not a reason to take a trade. It is not a reason to take a trade. That is fear. It is greed. It is stupidity. It is not an edge in the market. The reason why I've been able to be a consistently profitable trader for as long as I am and make my living off of trading and teach others how to have the same success that I've had is because I don't let my emotions and my ego get in the way of my strategy. My strategy tells me when to take a trade and when not to take a trade. And I don't listen to anything else. No noise, no nonsense, no BS, no FOMO, no missing out on a move. If I missed a trade, I didn't miss a trade. It wasn't my trade to take. I didn't miss anything, right? There is a particular edge in the market that allows me to be a profitable trader. And that edge means I'm not going to be able to catch other traders' edges. And I want the same thing to be true in your life. Don't go on crypto Twitter and find people who caught a great move, who caught a great trade, and think that therefore, because they made money right now, therefore you must emulate them. I want you guys to build your own trading systems with your own unique edge in the market that you can backtest, that you can verify, and that you can feel confident in. That is how every professional trader trades, with their own system. Professional traders do not listen to noise, do not listen to other inputs. They find a mentor who can teach them how to trade. They devise their own system. They stay in a community where they can benefit from the research and education and contributions of others, and then they hammer that edge over and over and over again. And that's exactly what I do. So as we can see here on the 4-hour chart, getting a long signal from the daily. Now, if you're taking this trade, that's going to be a half risk trade because you are trading against what? The dominant trend on the daily time frame. You're always using less risk when you're taking counter trend trades, if you're taking counter trend trades, which we typically do not do. But anyways, The 4 hour setting you up for a position, you'd be right back at break even right now had you put on this position. And again, let's take a gander and see if we would have even been able to take this position, which we would not have, because as we can see, I think I have median on right now. Yeah, so let's go to the average true range. However you want to slice it, whether you're using median true range or whether you're using average true range, we closed above the qualifying line, making this unqualified on the 4 hour time frame. Therefore, no FOMO in this particular situation, not a trade to take. Now let's go down to the hourly. Let's see here. The hourly, again, didn't do so well on this either. There was a trade. There was a profitable trade here. Let's go take a look here. Yep, there was a profitable trade there. You would have made not much. That wasn't a very good movement, but I mean, it wasn't terrible. About 2.5%, not a bad trade. Again, if you're able to lock, see, this is what most people. So for a profitable trader, the best thing that you can do, so ideally, like the best possible thing that could happen to you as a professional trader is 1% return on investment per day. Like that is a magic number. That's where everybody shoots for. And often you're going to fall wildly within that. What does that mean? Well, it compounds, but if you did the math, you would think, well, that's 30% rate of return per month, right? So that means that if you have $10,000, that in the best case situation, you're returning $3,000 a month or on $10,000. And that not only is, well, a little idealistic, but also that is a good capital amount. That is a good monthly income. And then you would reinvest that back in your trading account, i.e. taking more risk and therefore building larger positions out. Or you take that money and you first build your emergency fund, and then you start investing that money in the long term into things that can build you passive income over time or allow you to retire in 10 to 15 years. That is the plan. That is the goal. That is the goal, to use the income, to use the profits off of your trading. Trading is not, I'm going to make $8,000 today. If you make $8,000 today and you didn't have the capital required to assume that position size, again, if you're making $8,000 a day or on a trade, that's fine. That means you're a larger capital trader. The goal is to return a reasonable amount on your investment per month to be able to live as an active trader. And then once you become an active trader, this is the route, right? You spend a couple years grinding and becoming a consistently profitable trader, and then you start trading other people's money. This is how almost every single professional trader actually starts making the big bucks, right? They actually take on a couple $100,000 or more of other people's money because they can show on paper with an exchange statement, right? Here's the statement from my broker. Here's the statement from my exchange. Look at how much money I started the month with or the year with, and look how much money I returned at the end of the year. And I've been able to do this consistently for 6 months, 1 year, 12 months, 18 months, 2 years. And then they get investors to say, all right, cool, kid, here's $50,000. And then they trade that and they have a 22 split, or they have whatever split is required. And you can do this in cryptocurrency. You can also do this in Forex. You don't have to go to school. You don't need a license. All you need to do is trade, be able to trade, be a consistently profitable trader, and then just go out there and sell yourself. That's how it works. That is the route. That is the route that I'm teaching people to do. It's not easy, but it beats by a large degree working for somebody else. Okay. So I think this is a good opportunity to take one quick pause and thank Tom Rivanov for joining the community over there on YouTube, and Sohail over there on Twitch. Guys, let's get this money. So let's look at the daily. Now, the daily setting you up for a position here. Again, we're going to have to go down to even lower time frames to catch the pump candle, right? The hourly did not catch this. We have indecent signal here that generated about 2.5%. This was a losing trade. So let's see here. And then we lose only about 0.34% on that trade. So we just gave a little bit back on the profits from this trade. Let's see, initiation right here. And we're looking from an hourly entry right here. We're looking at a first take profit of right around 10.7, right? 10.7, 10.9, and 11.1. Okay, so those have yet to come, but that is the hourly on the table. But again, as we can see, we are above the qualifying line. What does that mean? This is not a valid trade. We don't take this. Okay. Let's go down to the 30. Let's see if we would have caught something on the 30. Now, the 30 set us up, but again, we would not have taken it because we're far above the qualifying line. But let's assume that we're disregarding the qualifying line, because guess what we can do? Disable it. Do at your own risk. This would have hit 2. I would have hit 2 of 3 take profits. So that would have pulled you in about 3% on the daily. So whether you were trading on the 30 or whether you were trading on the hourly, you locked in some profit today. By the way, not on the recent movement, on the 30 caught it on the recent movement directly afterwards, following it, but on the hourly, the movement prior, kind of the calm before the storm, and that's going to depend on your time zone and really how you're trading. Let's go down to the 15. 15 again would have caught you a TP3 trade, so a full risk, full cashed out trade at about 3.62%. So one of the few situations where the 15 actually did you pretty good. Again, we have a losing 15-minute trade over here though, and a losing one here, and a losing one here. And again, I know a lot of guys have like adjusted the end, this isn't, I'm not adjusting Minx for the 15-minute time frame. So this is using daily time frame settings. So, bear with me. But again, here's a good, if we look back, we can see a good 15-minute trade over here, about 3% return back here on the 17th. So good trade yesterday, too, to the upside. Hey, Phil, what's going on, my brother from another mother? Thank you so much for the 2, my good man. And he says, the weekend starts here. Best P, man. Hey, best to you, man. Thank you so much for reaching out to me. Shout out to you and Manchester men over there, my good friend. Hopefully you guys are doing well, and hopefully it's not too hot over there in the UK today, man. It is broiling here. Broiling. Absolutely broiling. So we talked about Bitcoin for a whole long time. Let's talk about price predictions. Let's talk about where price is going to go. I'm not going to be surprised to see price fail. Would Quadrigo keep us out? No. Why would Quadrigo keep us out? We're not even above the baseline yet. The baseline is going to run from, the trade qualifying line is going to be based off of where the baseline is. So as long as we're in between the baseline and the qualifying line, that is a valid trade, assuming the rest of our system tells us to go. So no, Quadrigo would not keep us out of this trade unless we pumped right now from 10.5 to above 11.8. So we're talking $1,300 over the next 24 hours. And, well, highly unlikely. Have I seen it happen? Well, no, I actually haven't. I have not seen that happen. So, that's my take on BTC. I remain short. I remain sitting in cash. I remain, I'm not in a full, I will say this. I'm pretty much fully flat. I'm looking for active trades, but I'm hedged, right? So I'm hedged. So if BTC's price goes up, I lose BTC. I don't lose USD value. If BTC's price goes down, I make a little USD and I make some crypto. But overall, I maintain. So just hedged, man, just hedged. And something that I want to point out, because I had to point this out to a few members this morning too. Like, okay. I'm going to take a brief segue here. In fact, I'm even going to make a timestamp for this because I want this to be a clip that I can go back and reference. Okay. And this is starting at, let's say, 27 minutes and 40 seconds. Okay. And so I'm going to talk about shorting for a minute. And let's just say 28. Okay, good. We'll just say 28. And then we'll get on with the rest of the analysis of the markets. Okay, so this is how inverse futures contracts work when trading Bitcoin, okay? This is how short selling works on inverse futures contracts, okay? We have to make a few clarifications here. We have to define our words because words are important. So, first thing, margin. What is margin? Margin is nothing more than the collateral required by an exchange to put on a certain position size. When you margin trade, you are accepting loaned money from a broker, which generally comes from an investment bank, or on the case of Bitfinex and other exchanges like that, for example, a PTP lending pool, for example. But either way you want to cut it, wherever the money comes from, you are borrowing money that you do not have to take on a position in the market that is larger than you otherwise normally would have, right? That is what margin is. Margin is just, okay, I want to trade 1 Bitcoin. I only have half a Bitcoin. So you go to BitMEX and BitMEX is like, yeah, sure, man. We'll give you half a Bitcoin on top of your half a Bitcoin to trade 1 full Bitcoin, right? But you're going to have to put up your half a Bitcoin as collateral, right? That's how it works. That's all margin is. Margin equals collateral, okay? Leverage is literally nothing, okay? All leverage is a slider that influences how much collateral is required. That's it. So if you slide the leverage slider to 1x, that means you are trading with no margin. Okay. So that means that BitMEX is not going to loan you any money. If you slide that leverage slider to 2x, BitMEX is going to let you take on twice as much of whatever you want. Allow you to, not automatically increase your position size 2x, right? You have to actually put on the trade. So all that means 2x is you need to put up 50% of margin. You can take on twice what you have. 3x, you can put on 3 times. You need to put up a third margin. You need to put up a third of collateral, 33%. 25x leverage will allow you to trade a position 25 times larger than whatever margin you put up, okay? And you're only required to put up 1/25th of that margin, right? So there's a couple ways, they're the same thing, but however you want to think about it. Either every time you move the leverage slide, the more leverage you use, the less margin you have to put up, or the more leverage you use, the more you can take. However you want to look at it, it's the same. They're both equal. But again, I think like most people are just really seem to be really confused by this whole shorting, margin, and leverage thing. And it's really simple, right? It's really simple. There are some boxes on BitMEX or ByBit that are important. And then the most important box is the box called quantity. Okay, that is the most important box. Whatever you put in the quantity box is the position size that you're trading with, irregardless of how much leverage you're using or how much margin you've put up to take on that position size. All right. If you go into BitMEX or ByBit and you put in 1,000 into the quantity box and you hit buy, you are trading with $1,000 of USD worth of Bitcoin. Doesn't matter where the leverage slider is. The leverage slider could be at 2x, it could be at 100x. All that leverage slider influences is how much margin you are putting up to put on that $1,000 position size, and based on that, where your liquidation price is. Because once you lose your margin, they're going to pull their loaned Bitcoin. That's what liquidation is, right? If I only put up 10% of $1,000, so I take a $1,000 position size, $1,000 worth of BTC at 10x leverage, okay, it is not $10,000. It is not $10,000 worth of Bitcoin. It is not. I only put on $1,000. Sliding that leverage slider to 10x does not make it $10,000. All that leverage slider means is that I am only putting up 10%. Whoa, hello. I am only putting up 10% of that $1,000 as collateral to the exchange, as margin. So when I lose that 10% of 1,000, so let's say price moves down, once I lose $100, which is all I put up as margin, BitMEX is not going to let me lose any of their $900. They're going to liquidate my position. They're going to take my $100 because that's gone, bye-bye, and they're going to pull their $900 back, and my trade's going to be settled, and I'm going to be minus $100 plus fees, okay? So that is how leverage works. Sliding the leverage slider over does not multiply your position size. It just influences how much margin you have in the trade, and that influences your liquidation price. It's as simple as that, guys. So the only thing that matters is the quantity of contracts that you put on. If you do your position size calculation and it says at 1x leverage on the calculator, you always put 1x in, you're going to get a number. That number is going to be the quantity of contracts that you type in. Doesn't matter what leverage you choose. Now you can double check this. There are going to be 2 boxes that you want to look at. And I think this is confusing for people. So on ByBit and BitMEX, they're the same. There's a little box that says order value. That is going to tell you how much BTC or XBT, if you're on BitMEX, how much that quantity of contracts is worth in BTC. So if you want to do the math, you just take whatever that number is next to order value, multiplied by the current exchange rate of BTC to USD, and you're going to see the dollar value of your position size. Should be almost identical to the number of contracts you're putting in. This is very, very important on Ethereum USD because I think a lot of people get wrecked trading on the Ethereum USD perpetual swap contract on BitMEX, and that's because one contract does not equal $1. Okay, do the math. It's inversely tied to the XBT USD index. So $1 on ETHUSD is actually closer to like 2 or 3. Okay, so you need to put on a significantly smaller number of contracts. So like for example, somebody got a hold of me in the group and they're like, hey man, I just put on $9,600 worth of contracts and all of a sudden I'm trading with darn near $18,000. There's actually more than that. It's like $18,000, $19,000 position size. I'm like, right, because you need to double check that order value, right? Because that order value is going to display how much an ETH or XBT your trade is worth, and you need to do the math just to double check. But once you understand the conversion rate, you just make sure that the order value is correct. And this is actually easily taken care of with the position size calculator that we provide, because it also spits out the BTC number, and then you can just reference when you're taking that ETH/USD, is the BTC position size equal to the order value, all right? So there's that. And then cost. The box that says cost is not how much your order's worth. That is just how much margin it's going to cost you, right? That is going to be the initial margin requirement. So if you slide the leverage slider further to the right, that cost is going to decrease. If you slide it to the left, take less margin, that number is going to go up, because it's going to cost you more to put on a trade with less leverage, because they're going to loan you less. So leverage slider does not matter. It only influences your liquidation price and your amount of margin you're putting up. So here's what I mean to say with all this. This is the natural. So first off, I think that's super fundamental. I feel like this is really, really, really difficult for some people. And if it is, I don't mean to be disparaging. I just wanted to explain that in a very, very clear way, because I've explained it a lot over the past few weeks, especially for some reason, because we flipped bearish. And I know a lot of you guys are unfamiliar with shorting, and that's fine. You guys are learning. I'm very patient, and I'm here to help you out. But I just want to make sure that you guys get that, because I feel like I've repeated myself and said the same thing a lot, and it seems like I keep still getting the same questions. So leverage does not matter. Leverage does not change your position size. You have to type in the position size you want. Changing your leverage before or after that only changes the amount of margin that you have into the trade and affects your liquidation price. Doesn't change. So if you put on $1,000 in quantity, price goes up 10%, you make $100. Doesn't matter if the leverage slider is 100 or at 1. You make $100. You make 10% off 1,000 minus fees. That's it. Okay, so when we're talking about hedging, so now we need to talk about something else that's very important, right? And then we're going to get back into the analysis, and we've got a lot more to talk about today. When we're talking about trading on BitMEX or ByBit, those are inverse futures contracts. What that means practically for you is that you are already 1x long the moment you deposit funds on that exchange, because you are holding Bitcoin. That means if Bitcoin's price, that means the amount of Bitcoin that you have will not change unless you buy or sell, but the dollar value of that Bitcoin will change based on the current exchange rate of Bitcoin to the dollar. Okay. Now, I don't like that. I value my wealth in dollars, okay, not in Bitcoin. I will lose Bitcoin to make more dollars. And if I can increase both simultaneously, that's great. But you need to think in your head, in your mind, what you want to maximize ahead of time. If you want to maximize dollars, you're going to trade a certain way. If you want to maximize Bitcoin, you're going to trade a certain way. If you want to try and maximize both, you're basically going to trade the exact same way you would trade to maximize BTC. Okay? So when you deposit money onto ByBit or BitMEX or Deribit or FTX or anywhere that is a leveraged exchange, really on any exchange, really, any cryptocurrency exchange you deposit Bitcoin onto, you are already long. You are already in a long position because you are holding Bitcoin, meaning your dollar valuation will change based on the exchange rate, right? Bitcoin's price goes up against the dollar, you will make money. USD. You will not make more Bitcoin unless you take a trade. You will lose dollar value if BTC USD moves down, but you will not lose BTC. So keep that in your head. Next thing is when you go short on BitMEX, you are not going to lose dollar value if price goes up. Now, I know what the exchange says in that unrealized P&L column. It says, hey, you're losing money. You're not. You are only losing Bitcoin. If you have $1,000 on BitMEX and you go short 1,000 contracts, so equal to $1,000, you have locked in 1,000 US dollars because you are already 1x long. So you are just going 1x short. You are flat. It is the same as sitting in cash. If Bitcoin's price goes up, you will lose Bitcoin. but you will not lose the value of what that original position size was worth. Do the math. Doesn't matter what that P&L column says. The math is what matters, okay? So if you have $1,000 and you put on $1,000 worth of Bitcoin, that is, and you put on $1,000 short, and price pumps up 1,000%, meaning that's you'll probably lose all your Bitcoin at that point. But let's just say it pumps up 100%. Price 2x's overnight, right? You're still gonna have $1,000. You're gonna have significantly less Bitcoin, but that Bitcoin is significantly worth more. So all that unrealized P&L column is showing you if you are not taking on risk. So if you take a larger short position than how much dollars you have, now you're losing money if price goes up. But if you only put on what you have, if price starts moving up, the only thing that unrealized P&L column is displaying to you is your opportunity cost. That is equivalent to, this is how much money you would be making had you gone long instead of gone short. But the nice thing about going short is that you are hedging your dollar value, which to me is what matters. I want to have the same amount of dollars when I wake up as I went to bed. So you can have a short position open at all times. So if you are a trader who trades for USD value, you are hedging your position sitting in cash. The same as moving from Tether to Bitcoin if you want to take a trade. So there are a lot of traders I know, and there are times when I do this, like right now, for example, for me, where I have not a full risk, but a hedge short open on something like BitMEX Z19, which is the farthest out expiration date. Let's say I've got $50,000 in capital in BTC. I have a $50,000 short position on Z19 at 1x or 2x or 3x leverage, generally 3x leverage, because that way I can use my margin for something and my liquidation price is still going to be pretty far away. You're not going to lose any dollars. Doesn't matter when you close it out. You won't lose any dollars. You will not lose any dollars. You will lose Bitcoin if price goes up. That's it. You can do the math yourself. I'm not crazy. I've been doing this for years. It's just the way that it works. People deposit money, and this is worse on ByBit because ByBit is better than BitMEX and shows you the dollar value of the crypto you're losing. This is nice for unrealized P&L in a profitable trade or an unprofitable trade, so to let you see the actual dollar amount, so it's not like a goddamn casino over on BitMEX where they just show you XPT. But in your mind, you're going to think, I'm losing that money. You're not. It's just showing you how much money you're not making by being long. You're not losing dollars. That's so critical for people to understand. Now, let's say you have $1,000 on BitMEX, you go short 1,000 contracts at 3x leverage. All right. That means you only have $330, give or take, margin in the short trade. You know what you can do with that other 660? Whoa, hey, what's going on? How you doing, late? Yeah. Come here often? Do you know what you can, thank you so much, Fire9BR, for following over there on Twitch. Do you know what you can do with that other $660? You can take trades. If you want to take a long trade, you can take a long trade. And now guess what? You are just making money on that long trade and your entire balance isn't fluctuating based upon Bitcoin's price. Only that small segment that you have in the long trade. You don't need to go long 0.66 and go short 0.33 to hedge out at different leverages. That doesn't make sense. That's not how it works. You are already long in the first place by having your funds in BTC. So you just figure out how many dollars that BTC is worth and you put on a short position equivalent to that. Now you're hedged. You're sitting in cash. Doesn't matter where price goes, you maintain that same amount of cash. So important for people to understand. But most people don't get it and they end up making mistakes. And I don't want you guys to make mistakes. If you fat finger a button, if you put on the wrong position size, if you put in the wrong number of contracts, that can be a costly mistake. It's very simple. The math is very easy to do. Just sit down, make sure you understand it, ask lots of questions. I'm here to help you out. My whole staff is here to help you guys out. So just make sure you understand what you're doing before you go on. Okay. What a day, man. What a rant. I think that was very important. So where did that end at? 49. Let's just say 49.15. Yeah. I'll probably have to break that down in a smaller segment. I didn't really mean to talk that long about it, but I think that's really, 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 really super clutch critical for people to get, man. Okay, let's get into Ethereum. And a little more of the same, but not crazily different. Let's go over and look at it on BitMEX. Again, Ethereum, kind of the baby brother of BTC. So ETH-U19 again was a good movement to the downside. Because anytime that BTC outperforms Ethereum, so anytime BTC USD outperforms ETH anytime BTC USD outperforms ETH BTC moves down. ETH BTC moves down. So anytime you see Bitcoin tearing off and Ethereum USD lagging behind, ETH U19 is a good short, generally. I don't know. I trade to pay the bills. I train everybody to pay their bills, wrapping around. I will tell you this from about 10 years of investment and trading. There's no such thing as play money, bro. There's no such thing. If you treat money like it's play money, even though it is play money, take money seriously, That is my recommendation. If you take money seriously and you treat, this is how I teach traders with little capital to actually become professionals. If you treat your $100 like it's $100,000 and you learn to trade correctly with that $100, you're going to have success for a lifetime. But if you're okay, you're like, it's just $100, man. Who cares? I'm just blow it, man. I'm a degen long. Well, it's probably how your personal finances are going to go too, because that's your mentality and that's your mindset generally. And not everybody's like that, but that's just what I've noticed over and over and over and over again. People who don't respect their own money doesn't respect them. Now, I don't mean that as a call out on you, but I don't agree with that mentality whatsoever. There's no such thing as play money, dude. Doesn't matter if it's $100 or $100,000. Treat it with respect and let it grow. Learn to make it grow for you. Learn to make it work for you. If you have $100, why not make it grow for you? Why not make it work for you? Right? It's better than zero. That's why I tell people like, hey man, here's some simple math. If you're in your 20s, put $45 a month into a Roth IRA, it's $1 million when you want to retire. Okay, the magic of compound interest. If you're in your 30s, it's $150 a month. If you're in your 40s, it's $450 a month. If you're in your 50s, you need to stick away $2,000. You'll be a millionaire when you retire. Why would you not want to be a millionaire when you retire? I'm gonna be young forever, man. I'm gonna live fast, die hard, right? But the statistics are you're gonna retire old. So you kind of want to be a millionaire when you're old, right? All of you can be millionaires. Put money in the market. $50 a month, man. If you're in your 20s, $50 a month. Invest it. Doesn't really matter what you invested in. Really doesn't matter, honestly. Because if you're in your 20s, then it's going to be 50, and we're going to have several economic swings in between here and now. So we'll get into that when I talk about Ray Dalio's thing here in a little bit. Ethereum USD having the nice little bottom bounce. Again, up about, what are we up on the day? Up about 655 on the day, about 626. So about a combined 12%, coming back up to the top of this completely bearish engulfing candle on yesterday's movement to the downside. Obviously, as you guys can see, we are getting a take profit short signal. So if you were writing this short signal from over here that the system signaled on the 11th of July, 2019, which is when which is when the call to go short on Ethereum was called. Excuse me. You would be taking profit on your trade right now. But again, as we are in a bearish structure, you would maintain your hedge. So close out your position, evaluate how many dollars you have in Ethereum, and then go short that value of Ethereum. And again, you're locking in your USD value. Preserve the money you just made. Don't just be like, okay, cool, it's time to go long. It's not. Down to the 12. Down to the 12. The 12 is doing a baseline bounce back up to the 12-hour baseline. WADA is dying off. CCI is creeping back up to the 0 line, as is Mink. Still no long confirmed signal yet. In fact, again, as I would assume, rejection and consolidation before any kind of breakout of the movement. Now, the Ethereum 4-hour did you actually pretty good. Ethereum gave you a good 4-hour setup right here, baby. 4-hour, completely valid 4-hour long. WADA confirms. Volume wasn't fantastic, but a lot of people I know were thirsty for it. I know some guys in the group took this earlier to the upside. Nice 5% trade. Good 5% trade so far. Let's actually look at Quadriga and see what we would have locked in. Take profit 1, yeah, for sure. A solid 5% on take profit 1. Stop loss moves to break even, and we're currently consolidating above the 21. If there was any asset that didn't look bad, it's actually FUSD. This might have some legs. But again, it's going to depend on Bitcoin, because if Bitcoin consolidates at its higher level, then Ethereum is probably going to rise up to join it. But if Bitcoin rejects violently, then Ethereum is just going to drop right back down. Let's go to the hourly. Again, hourly not catching the pump very well, not very sustainably. Good hourly trade over here. So we start off, if we go to the 17th of July, here's 7 o'clock in the morning. This is going back. So this is going back yesterday to yesterday morning. Start off with the loser, and then coming in right around the noon hour. So during our show, 1 o'clock. This is UTC time, so keep that in mind. This is UTC time, so it's 5 ahead of me. So this would have been 8 o'clock in the morning for me. We take price to the upside right here. That is a very good trade. Let's go to Quadrigo. We would have locked in Yep, all of those three take profits. Very good trade. Let's see, for a total of probably averaging out for about 4 or 5% on that trade. We get another good signal over here. We take this trade to the upside. And then we just got an hourly long signal 2 hours ago. And we've got about 8 minutes until the hourly candle closes. So, but I don't really like this one. I'm sure we're probably above the qualifying line. Yeah, above the qualifying line. So as you can see, we take this trade for a loss, we take this trade for a win, this trade for a win, and this trade we wouldn't take. So 2 winners, 1 loser, and a very small loss of that, because you can see we enter here and we get out at a minuscule, what is that? Like not even 0.5%? That's 0.73%. And then we lock in 5% here and about 5% there too. So good trades, guys, good trades. Nothing to do right now, but again, on the 4 hour, the 4 hour is interesting to me for Ethereum. Again, missed the initiation window, but I do like this consolidation above the tertiary. Having a nice little run up here to test our secondary doesn't seem crazy to me. That would be another 8% to the upside. So just trade safely, guys. I wouldn't clutch your luck, because again, half risk, you'd be trading against the dominant trend. And the dominant trend on both Bitcoin and Ethereum on the daily and HTFs is bearish. So having said that, there is Ethereum analysis. Okay, now I've got a, let's hop over and do Forex, and then we'll go to break. We'll come back. I've got a lot of news, a lot of fundamentals that I want to talk about as far as trading goes, and we'll take your user submitted chart requests. So let's go over and do Forex. Forex doing pretty well for me today. Hit a few take profits today. Hit a stop loss too, though. So again, ebbs and flows. Aussie yen, here we are on the daily. Nothing to do so far as the Aussie yen is concerned. Again, here was the last long signal. Took profit on this trade and then exited the trade at break even right here automatically. We are consolidating right at the baseline, again, having the setup for a nice reversal baseline bounce. But insofar as a primary signal, I don't see anything, nor a continuation signal. The Aussie dollar was a signaled long right here. As you can see, everything confirmed. A little bit of pullback to the, let's actually pull our VGI up right here. Yeah, a little bit of a fake out, honestly, with our VGI. If you didn't double click in and look, it almost looks like it crosses under, but it does not. So a nice long signal here, a little bit of drawdown, and then back up into a nice profit level. Again, would be targeting around 70.66.5 on that one. Let's see here. Canadian Swissy took the continuation long on the Canadian Swissy. Pull down, drawdown right now, currently to the daily baseline. Nothing really so far as to do as this. If we do close below the daily baseline, I'll take the small L on this one. CAD yen is signaling a short on today's candle. We'll see if WADA does end up closing below the explosion level. This one looks like a nice short to me, honestly. The CAD yen does look like a nice short. We've got CCI crossing below the zero line as well for nice confirmation, and our VGI firmly pointing down. So that's pretty good to me. Took the Swissy yen short yesterday, as you guys can see, and a little bit of profit right now. Wick down, pulling, having a little bit of a buyback right now, but again, nice confirmed short signal on the Swissy yen yesterday, so we'll just let that play out. Euro Aussie again, last trade would have been a continuation short over here, which would have been doing still nice for us. No reason to exit the trade yet. Actually, on today's close, we would be getting an exit of the trade, so that's a very, very good trade on the Euro Aussie. Euro Canadian, nothing to do yet. Exit your short if you entered into that continuation short. Entering right here, maybe hitting some profit, not sure. Most likely this is a little bit of a loss or a break-even trade, depending on where the daily closes. Euro Aussie, nothing to do right now. Euro Kiwi, as you can see, I've been riding the Euro Kiwi short for a while. Where's my entry right here? The red line is my entry into the Euro Kiwi short. I've already hit take profit 1 and just letting this baby ride. Euro pound, let's see here. Continuation long, this one was a losing trade. This was my stop loss that hit today. Euro yen, got the continuation short signal over here. That would have been a good trade to ride. Euro dollar, Took the euro dollar short. This is day 2 of drawdown, coming back up to resistance right now. RVGI has already crossed to the upside, so I'm relying on Minx on the continuation signal. Minx has not crossed back up to the upside, so there's nothing to do. We haven't closed above the baseline. And again, a couple days of drawdown, and then price moves in our favor, or it might not. Again, you just trade the statistics, and over time you win. Continuation short with signal on the pound Kiwi. That would have been a great trade to ride to the downside. Let's see, our pound CAD. This is the pound CAD is probably the worst performing trade that I have on right now. Entered short on a good continuation short signal, and Minx crossing to the upside. So, however, depending on how the day closes today, we'll probably be exiting this trade, which is good. Missed my stop loss by just about 15 pips, so that's pretty good. Swissy, or pound Swissy, as you can see, took this trade short up here. Ended up taking all my profits because price came back down to my break even yesterday. So took profit down here, and then price popped back up, and that's okay. Out of that trade, at a nice profit. Pound yen, nothing to do. Would have been riding a continuation short. The pound dollar, I don't see anything to do on today's candle. The Kiwi dollar gave a nice long signal over here, and this was one I missed, and then I didn't have an opportunity to get back in, but the long signal was good. The long signal was valid, and this is a good trade. That's quite a few pips. Kiwi CAD, long on the Kiwi CAD, entered here. I've already taken profit today on my first position, so now I can move my stop loss up to break even. Modify that position live, and just let that baby ride. Kiwi Swissy, again, the Kiwi, this is the other Kiwi trade that I missed because that was a day that I wasn't actively trading. Continuation long right here was a fantastic signal. Same with the Kiwi yen. Same with the Kiwi yen. Dollar CAD, nothing to do on the dollar Canadian. The pound Aussie would have been a good continuation short, but you'll want to be taking profit on your short today on candle close. Dollar Swissy, nothing to do here, man. Just a little bit of wibble wobble. Dollar yen, looks like we are riding a short signal back in profit now, but you wouldn't have taken this one anyways because WADA did not confirm. No trade on the dollar yen. Aussie CAD, let's see here. A long signal over here that would have been a loss. And nothing much to do. Nothing much to do on this one. Aussie Swissy signal a continuation long that you would have, no, you haven't hit. Maybe you got filled on that upper wick. Maybe. And then still nothing to do on the dollar yuan. I'm watching this one like a hawk. I feel like there's a really good trade here somewhere, but I just need to see volume and I need to see a breakout. Look at that low volatility, man. That thing's going to break. So anyways, guys, trade safely. That's your Forex market analysis for today. We're going to head to break, but before we head to break, as a trader, as somebody who makes his money in the market, selecting our exchange is going to be one of the most critical decisions that we can make. And as a professional, I am often asked what metrics I use to evaluate an exchange, and I always say the same thing. Security, ease of use, and customer service. And the exchange that I choose, I've moved a significant amount of my capital over from BitMEX over to ByBit because they check all those boxes for me better than any exchange currently that is doing cryptocurrency derivatives or cryptocurrency futures. If you guys would like to test out ByBit for yourself, you guys can go to ByBit.crackingcryptocurrency.com, link in the description down below. If you use that link, ByBit will give you up to $60 to try their platform out in free margin. You can test it, you can try it, you can take the Pepsi Taste Challenge and see how it is superior to all the other derivative exchanges on the market, in my humble opinion. And again, ByBit just published a video this morning about how the reason I like ByBit, and I've said this over and over again, is their customer service, man. Their customer service is nothing to sneeze at. There was a member that is in my group. He is a trader under my tutelage. He put on, there was a situation with Kraken's index, and that trader lost $300. They refunded him the $300. BitMEX doesn't do that. Deribit's not going to do that. Binance doesn't do that. There's no exchange out there. And again, that's why I really went with ByBit and why I really like it. It's their customer service, man. And seeing things like that goes to show me how more professional our space is getting. Again, ByBit just published a pretty sweet video this morning on YouTube and on their Twitter about how they helped a trader who accidentally deposited a lot of Ripple to their testnet recover it and get his Ripple back. So if you guys want to take the Pepsi Taste Challenge yourself and check them out, again, that link is ByBit.crackingcryptocurrency.com. We're going to take a quick break, guys, so I can refresh and put on a couple 100x DGen longs. When we come back, we're going to talk about the life and times of a professional wash trader. I'm going to respond to the YouTube questions that were asked yesterday by Adam about cryptocurrency's value as an investor, and I'm also going to talk about paradigm shifts and the coming economic collapse and how to prepare for it as a trader and an investor. Don't go anywhere, guys. We'll be right back. Okay, so we've got some stuff to go over today, guys. Interesting. Lighting is a little bit less good on this scene. All right, cool. Just let it adjust. Everything's fine. Thank you guys for hanging through the break. We got some really interesting stuff to talk about right now. So the first thing we're going to talk about is this. Let's find it. All right, so this gentleman right here, for $15,000, he'll fake your exchange volume and you can get on CoinMarketCap. So to many crypto enthusiasts trying hard to legitimize our market, manipulation on exchanges is a problem, but to 20-year-old Alexei, it's a living. So Alexei here is a sophomore at Moscow State University, and he is the co-founder of the company GotBit. So what is GotBit, you might ask? Well, GotBit is a firm that specializes in making small cryptocurrencies look like they have market activity on exchanges. Alexei and his partner program bots that trade back and forth with each other to artificially create trading volume, allowing a coin to be listed on CoinMarketCap and thus on larger exchanges. So GotBit is not registered in any jurisdiction, and in the interview, Alexei even admits that GotBit is not entirely ethical. Now, this is coming off the heels of the Bitwise volume report that 95% of all volume in the space is that 95% of all volume in cryptocurrency is artificial, and that only 10 exchanges publish reliable volume information. Bobby Ong of CoinGecko.com said businesses like GotBit are not hard to find, and that wash trading is easy to detect from the outside by looking at things like where are orders executed, or pursuant to the bid-ask spread. You can also look for repeatable patterns in trade execution, in trading quantity, and bid size. So, GotBit charges $6,000 a month to fake volume on any exchange you want. According to Alexei, exchanges are well aware that his bots are running, but as they have an interest in attracting customers with that fake volume, they have no interest in shutting it down. Most exchanges charge about 2 Bitcoin to list a project. Why would they want to stop projects from sending them about $20,000 a pop? So, Alameda Research, who is behind the FTX exchange, a crypto trading firm, analyzed order books and trading history of 48 crypto exchanges around the world and found that 14 of them, 14 entire exchanges, have real trading volumes of 0. It is all artificial wash trading. That means that literally all of the volume on those exchanges is coming from bots, trading back and forth between each other. According to Alexei, on these exchanges, GotBit accounts for almost all of their volume. And we're not talking about coins in the sub 1,000 region on CoinMarketCap. We're talking about $300 to the $300 to the $500 range on CoinMarketCap. So when you're looking for those diamonds in a rough, probably just coal. But GotBit's clients, he says, are usually ICO projects that want to calm down their investors by showing market activity. Most of the builders, i.e. founders of ICO projects, do care about their projects, according to Alexei, and are trying to make them work. But he believes that out of 30 projects, there are only 2 or 3 that are, quote, really creating some value, have a working business model, and have built an actual project. The other projects can limp on for a few months of fake volume, which allows the founders to cash out, stop paying for the market making, which causes the token price to plunge and the dream to be over. So no more Lambos. And at that point, most of the ICO investors, they'd be happy with a bike. Now, according to Bobby Ong, again of CoinGecko, he says, quote, token projects. Dave, thanks so much for following over there on YouTube, my friend. According to Bobby Ong, he says, quote, token projects are sometimes pressured to use such market-making operators because they need to show their major investors and token holders that there is significant market interest in their project and things are going well, he said. Some are also doing it because they do not want their price to fall precipitously and want to maintain an optimal price so that it can increase over time from that baseline. Now, part of this pressure obviously comes from exchanges themselves. They often delist tokens if they don't meet a minimum volume threshold, a minimum trading activity. Alexei said that in one case, one of their clients made it to the top 100 on CoinMarketCap.com, but he failed to comment on which one that was. Now, obviously, you're thinking, if a real trader comes onto the exchange and is trying to try to dump that trader's real tokens on GotBit's fake buy orders, this is a problem for GotBit. They would be holding heavy bags of an illiquid coin. So to prevent against this, GotBit monitors Etherscan for large transactions of the coin in question. And if they see such a transaction, if they see a large transaction, they immediately pull all their orders because they're not trying to get dumped on. So, I mean, traders holding pretty heavy ICO bags, they're looking around, they see $100,000 in daily volume on some crappy exchange, and like, sweet, and they transfer their funds over there, and then no order book. It's one of those in the arms of the angels moments, you know what I mean? It's like, kind of like like an oasis in the desert. Now, let's see here. We're scrolling down a little too far, so we'll just go back up to the top. Now, let's see here. So GotBit even has an algorithm to dump a token without affecting price by finding buy orders that haven't been that already exist on the books and only filling them. Now, moving forward, Alexei says he has no illusions about the future of his business. The main factor he mentions is the FATF's, the Financial Action Task Force, new guidance for regulating cryptocurrency exchanges worldwide, which is going to require most crypto exchanges to adopt some form of KYC AML and more banking regulation. He says, quote, I think FATF will shut it down quickly. The cryptocurrency exchanges will be regulated like NASDAQ, and pumping fake volumes will be banned. So GotBit is winding down their services. So if you're an ICO project out there, this might be your last chance to get some fake volume because not only is that a factor, the FATF and financial regulation, but, Alexei and his partner have more pressing issues like getting through their final exams. Again, these guys are sophomores at Moscow State University. So, interesting article. I'll link it in the show notes. You guys can go check that out. I'd be interested to hear what you have to say about it. And for this, I mean, this doesn't, I know this might come off as negative about cryptocurrency in general, but I mean, there's no cognitive dissonance between understanding this report, this piece of news, and what I've been saying for a very, very long time. Don't trade on jank exchanges and don't trade jank coins. And you have to take a very, very, very particular mindset when you're looking at altcoins as investments. So, let's see here. I wanted to talk about, just to reference that Alameda research. So this is, let's actually go over here. So this is FTX.com. This is a cryptocurrency derivatives exchange, but they've got this volume monitor, which is pretty neat. So you just click on volume monitor here and you can actually see the daily reported volume from cryptocurrency exchanges and whether or not they meet kind of Alameda's research, check mark. This is going to be a nice confluence with the Bitwise real volume market scanner that we have over there. And this is Alameda's research paper. I will also link this in the show notes, but you can also see that right here. The link is right here. You just go to ftx.com/volume-monitor. Just go to ftx.com. You can click volume monitor right here. And here's the research report. It'll bring this volume research report right up, which goes over their methodology and how you can spot fake wash trading on exchanges. Okay, so now I want to go back to Adam Borokowski's comment. So I am going to copy and paste this, and I'm going to put this somewhere. Here we go. Let me pull this down, and I'm going to answer these questions. Okay. And we're going to go back to Bitcoin to have a nice little backdrop as we talk about these questions. And I'm going to answer them the best that I can. I don't know if I have all the answers, but here is my thoughts on your opinions, man. Okay, so Adam starts off. He says, hey, Justin, I am a big fan of the channel. Thank you very much. And I have posted these same questions to Slenny Decree, Chris at Crypto, and other YouTubers today, as it would be interesting to see the differing opinions. In my view, you are the most knowledgeable in terms of trading and markets, so your take on these questions would be appreciated. I hold Bitcoin and admit that I am not an expert in Bitcoin or the market, but I am guessing new investors may have similar doubts and questions. So question number one. Forecasting. There is a suggestion, either directly or indirectly, from a number of Bitcoin YouTubers that Bitcoin has a high probability of reaching astronomical levels ranging from $20,000 to even $5 million each. Basic market economics would suggest that if investors, either individuals or institutions, had the same outlook, this sentiment would already be baked into the price, and the price would already be close to those levels. Therefore, investors and potential investors don't share those views. If they did, they would be willing to purchase Bitcoin for much higher prices right now. True or false? False. So you cannot factor growth into investors' ideas of what the market is right now. So there's a difference between value and there's a difference between growth potential from an investment standpoint. So this is a different investment. This is a different strategy in value investing. So if you are looking for growth appreciation or growth profit, you are going to buy something that in your analysis, the market considers undervalued. And if you are, that is growth investing. So your only concern is the price of whatever asset you buy appreciating over time, because you are going to be a time traveler. You are a speculator. You identify value. You identify either, if you're talking about stocks, like PE ratio or dividends earnings or whatever it might be, whatever analysis you're using to determine whether something actually has value or what the company is going to do or potential partnerships coming up or whatever it might be. You identify something that the market currently does not value very much. You buy that asset, you transport it into the future when the market realizes how valuable it is, and then you sell it at a higher price. So from a growth standpoint, your only concern is the appreciation of the asset. Now, although that is how I trade, when it comes to my investment strategy, I'm more interested in things like dividends and passive income and returns. So I like cash paid out. That's why I like real estate. That's why I like dividend generating stocks. That's why I like other investments as well. Small businesses, franchises, as I've talked about before, which I have investments in. Anything that's going to generate income every single month, right? And that makes up a huge amount of what I'm reinvesting back into the market at all times, right? My trading generates my active income. Any money that I don't live off of gets saved, gets reinvested back into the system. Because that is how individuals grow wealth. I allow my money to work for me, and I don't chase money. So, and again, just, I know some people hear that and they're like, well, that's easy for you. You've got a lot of money. I started absolute broke. I come from a lower, I was never taught banking. I was never taught economics. I come from no money. I started from scratch. I started by busting my ass for a year, saving up enough money to try to trade full time, lost everything. I saved up $30,000 working my butt off for another year, pretty much just lived in a crappy apartment, put all my money in, just set all my money aside, lost all that money again, did it again, and now I've made it, okay? Took time, took patience, took energy, but I literally started from zero. Anybody can do it. You just tighten your belt, get a crappy apartment, save all your money, get an idea what you want to do with your capital, devise a system, and then just execute, right? And then you never look back. So from a income standpoint, you're looking at things that generate income, right? So those things can be factored into the price. So when we're looking at earnings reports, when we're looking at dividends paid out by a stock, when we're looking at how news is going to affect price, a lot of that stuff can be already baked into the price by speculators. But the problem with I guess the big problem here, or what's wrong about the statement, and again, I respect the question, is that the market is not always right. The market is wrong all of the time. Otherwise, price would stay the same. There would be no fight between the bulls and the bears. You have some investors who have a certain opinion about price, and then you have other investors who have a different opinion about price. And for that reason, you're going to get this mix, this fight between the bulls and the bears as we try to meet an equal price or a price of confluence to be in a zone of contention. And then you're going to get a lot of retail traders in who basically just kind of buy when price is going up and sell when price is going down, blah, 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 generally at the bottom, generally at the top. So no, I think that Bitcoin has the same probability of appreciating. And again, you use the word astronomical there because it's a big number. But again, that number is relative. So Bitcoin is currently trading around $10,000. So if it were to go to $40,000, that would be a large increase relative to its size, but I don't think that's astronomical in objective terms. Okay, it's not astronomical in relative terms, right? It's large in relative terms, but it's not astronomical. I think that assertion is now 5 million. I think is something, but those numbers are based off of speculators' fundamentals. So they're saying that Bitcoin will replace gold as the global store of value. If that is the case, there is definitely value in comparing the market capitalization of gold to what 1 ounce of gold is worth, and then extrapolating that to what the circulating supply of Bitcoin will be and determining what the value of 1 Bitcoin would be based off of total market capitalization if Bitcoin were to replace gold. So if Bitcoin had gold's market capitalization, then one would assume that you could figure out then, based on knowing exactly what the fixed supply is, you could determine what the value of one Bitcoin would be. And the common number that I hear is anywhere from 500,000 to $1 million. So that is based on a speculator or an investor's idea or opinion or analysis that Bitcoin will be long-term successful. So I don't think that there is anything astronomical about those price levels. I might disagree with, how quickly we get there. And I generally disagree all with the like when moon type shit. But yeah, I mean, I'm a Bitcoin investor because I think that it is a good value. I think that it is a good technology. I think that's going to change the world. I think that the world will continue to see the value in it. Reality isn't baked into price because news can be baked into price. Shorter term events can be baked into price. Like things that are going to happen tomorrow are probably already baked into price. But all that really means, what does baked into price mean? I'll explain that. Baked into price, you hear that word and you would assume that baked into price means that everybody knows that what the real value of something is. Nobody knows what the real value of something is. Everybody is a speculator. If I ask you what the value of Bitcoin is to you, what do you think it's a good price for Bitcoin? That's going to be a different answer from me. If you were to ask me, how valuable is this ring on my finger, your answer is going to be different than mine. Value is subjective. I think that there is objective value, but value, a personal interpretation of like a dollar value, that is completely subjective, right? And the only way we get to confluence is we have buyers and sellers agree on price, but that changes. That changes depending on market sentiment, depends on investor sentiment, right? So obviously we can see during December 2017, people were willing to pay $19,000 for one Bitcoin. And then in December of 2018, they were only willing to pay about $3,500 per Bitcoin. So the idea that anything is baked into price is nonsense. All baked into price means is that market movers have already made their move, right? So when people say that word, oh, that's baked into price, man, that's already baked in. All that means in reality is that if there is a sentiment that price is going to go down, then big money has already taken it down, right? So the movement is pretty much already done, right? And you might be able to catch a scrap of the movement, but the majority of the movement's already been made, because it was baked into price in advance by speculators by acting on their investment thesis. So there's no such thing as something being objectively baked into price. All baked into price means is somebody who actually has some significant capital to move price has already moved price or is already in the process of moving price. So it's more of a cautionary statement than something that's objective. So hopefully that's good. You may agree or disagree with that, but that's my honest take on that. The market is always wrong. The market is never right. And that is why prices fluctuate over time. Question 2, parabolic cycles. There is a suggestion either directly or indirectly from a number of Bitcoin YouTubers that Bitcoin will experience a similar parabolic wave as experienced in Q4 2017 and other periods in Bitcoin's history. Historic price movements have no bearing on future price movements other than perhaps influencing some investors to hold their Bitcoin in the hope another parabolic move will occur to the scales seen historically. The price could just as easily settle back down to 1,000 and stay in that vicinity. We have historically seen this boom and bust cycle where the bust cycle is indefinite with other commodities that have seen parabolic rises. True or false? True. Yes. There is nothing that says that Bitcoin will move into a parabolic cycle. That is an investment thesis. That can or cannot be your investment thesis. You are correct that we've seen lots of commodities enter into parabolic rises that then average out. And then the non-parabolic cycle remains for a very long period of time. But again, future is not written in stone. For example, we could see another massive parabolic cycle in oil. We could see a massive parabolic cycle in gold. Parabolic cycles are generally something that do tend to repeat given enough time. You see them with the rise and collapse of nations. You see them in the rise and collapse of relationships. You see them in the rise and collapse of asset prices. So, yeah, I think that there is a little bit too much like directly leaning on this idea among a lot of, Bitcoiners that, well, because we went parabolic before, that's just a natural cycle, man, and it's going to repeat. It's not. Like there's no guarantee, or I think, in my opinion, any level of analysis that is helpful from just saying, well, price did this in the past, therefore it's probably going to do this in the future. Every moment in the market is unique. Every moment in the market is unique. So, although I do think that there is, obviously, I think that I want to drill into that a little bit because, you're like, I think that overall the tone of that comes off as like, well, just because there was a parabolic cycle doesn't mean there's going to be a parabolic cycle. I completely agree with you there. But the fact that there was a parabolic cycle influences investors' decisions, which you admit to in this paragraph, right? And that matters, right? That can be a big matter, right? So that can be a big selling point. Somebody with $10 billion could decide to buy into Bitcoin because he believes in the parabolic cycle. So anything that can influence the minds and hearts of investors has an effect on price, and therefore nothing is baked in. Let's see here. Number 3. Whale manipulation. There is a lot of talk by Bitcoin YouTubers about whales manipulating the price of Bitcoin, when in fact little evidence of this has been presented. There is no tangible evidence whether this is simply holders of Bitcoin with large balances cashing out or investors buying large balances. There could be zero market manipulation. True or false? I highly disagree with this. I think that there is ample evidence. Again, go look at the Bitwise report. I don't really have anything that I could grab in my hands and show you. But it does exist, right? And if you give me enough time, I could find it. But I'm not really going to take the time to at this point in time. But I think that's something interesting for me to do. But if you do your own research, you will be able to find. Go look at. Okay, there's a lot of actual reports and statistics on this. Go look at go look at cash settled CME futures and silver suppression. All right. Go look at the Forex markets. The big banks absolutely manipulate the Forex markets because they have all the capital. And they have an advantage that other traders do not have, which is where they can see the order books and they can see who is long and who is short, right? Typically, nobody but the exchange can do that. So when you have that information, especially if you are the bank, and you are the bank that works for a central bank that prints the digital assets or the physical assets, you have all the power in your hands. It doesn't, I don't think this is even debatable. Like, sure, is there, are there whales influencing the price of Bitcoin? Absolutely, man. Absolutely. Especially low cap liquidity coins, because there's a lot of money to be made. There's a lot of money to be made. We saw it today. Let's go to the charts. I'll show you, man. Okay. Now you tell me if this is something that's baked into price, right? Look at this big movement to the downside, all right? 5% movement to the downside, triggering all the stop losses of anybody that went long here. Triggers all the stop losses. What are stop losses? Those are stop sell orders, right? So those stop sell orders are selling to somebody, filling a bid at that price, right? Filling a bid at that price. There are indicators on TradingView where you can go see whether statistical liquidation prices of anybody entering prices at any point in time. Those areas are targeted by savvy investors who are able to push price down on spot, right? Influence index price, and then take price to the upside on a leveraged exchange. I can tell you anecdotally that this absolutely does exist, okay? Absolutely does exist. I know this for a fact to exist, right? There are documented cases of individuals being caught doing this. It's kind of common sense, man. And I know common sense is often wrong, but low liquidity markets are easy to manipulate, i.e. there is profit incentive to manipulate them. There are lots of people with lots of cryptocurrencies. They manipulate the markets. Now, is every movement in the market manipulated? No. Go read Reminiscence of a Stock Operator, okay? That is a book. Reminiscences of a Stock Operator is a book written by a professional stock manipulator. And the key takeaway from that book is, does market manipulation occur in every single asset class? Yes, absolutely. Why? Because you've put a lot of money into the hands of individuals that have a profit incentive to move the market in a particular way, tripping up stops and taking price in the direction that they want. But here's what you cannot do. This is what a professional stock manipulator of years said. You cannot manipulate price in a direction it does not want to go. So, does manipulation happen? Yes. Does that mean that every movement in the market or any movement in the market is fabricated? No. You can't take price in a direction it doesn't want to go. But as long as you have smart money and dumb money, you're going to get what most colloquially refer to as manipulation. But we're getting into semantics here because, again, as I just said, you cannot manipulate a market in a direction it does not ultimately want to go. You can nudge it, though, right? You can nudge it, right? That's manipulation. But again, everything in the market is manipulation. You are influencing every time you click that button or post this show is market manipulation because I am influencing the hearts and minds and decisions potentially of traders and investors in the market. And something that I say might influence their decision. Every single thing that occurs in the market is technically by definition manipulation because you are attempting to get your order filled, and that's because it's a zero-sum game. So to buy at a good price, somebody has to sell at a bad price. To sell at a good price, somebody has to buy at a bad price. I think that I think that overall the whole like whales control everything is a little overblown. It's a real market. There is real volume. There are real traders. We have a very healthy market. Arbitrage is tight. Spreads are good. But yeah, I mean, there's just not a lot of liquidity. So absolutely, there are whale movements. There are whale movements. There are large traders that take advantage of uneducated investors and traders. It happens every single day. Every single day. Does that mean the market sucks? No, because the same thing happens on every single tradable asset everywhere, anytime, ever in the history of humanity. Having a large market share is an edge all in of itself. Bitcoin Trading Challenge has got a pretty good video about this where he talks about market edges. I recommend go checking that out for you guys interested. He talks about the I think he talks about 3 different types of edges you can have in the market. Shout out to you, Bennett. I haven't seen you in a while, man. Hopefully you're doing well over there with everything that you're doing. But yeah, a statistical edge is a good edge. So timing and strategy are both edges, right? So we focus on a strategy edge. Some traders, reversal traders, are going to focus on a timing edge. And having market share gives you an edge all in of itself because you can ultimately nudge the market along in a direction where it benefits you for it to move and against the interests of other traders, i.e. you take that profit incentive. 4. Sorry, this is going on for quite a while, but this is a lot of good questions and I think good for people here. This will give me, I'll cut these clips up and publish these probably. Number 4, Bitcoin is a commodity, not a currency. In Bitcoin's early days, it was viewed as a potential alternative currency. For example, to buy a pizza or send Bitcoin to a friend as a gift. While this can be done practically, Bitcoin has failed to be adopted by the mainstream as an alternative currency and is simply something which investors are speculating on. Bitcoin has little practical value other than as a speculative commodity, and in fact will never be adopted mainstream as a foreign currency. No, false. I mean, that's your opinion. My opinion is that it will. So Bitcoin serves as a good alternative to money. You can still send a very large quantity of Bitcoin almost instantaneously across the world, much cheaper and faster than a wire transfer. The Lightning Network is in active development. The Lightning Network is fantastic. Soon we'll be able to have you already have, if you want to. If you want to be a pioneer, it's not even a pioneer, man. We've got Blockstream on satellites. We've got the network on satellites. The internet could go down. We still have the Bitcoin network. You can still send and receive transactions. As long as a meteor doesn't hit Earth and we die, you can still send money faster, cheaper, secure, private, fully public blockchain. Has it achieved the level of mainstream adoption yet? I mean, we're 10 years in, man, and the government's afraid of Bitcoin. United States government did 4 consecutive days of posting fear about Libra, but that's because Bitcoin made Libra a reality. There would be no Libra if there wasn't Bitcoin, right? Bitcoin started it all. I think that Bitcoin is the better alternative, and I think that Bitcoin will be adopted as a worldwide currency because it's the best form of technology. It doesn't matter if it takes 10, 15, 20 years. The fact that it's 10 years in and we're having this conversation about, it's 10 years in and Bitcoin's failed, bro. I think that really kind of stands out that Bitcoin is succeeding, but it's a slow game. It's a very slow game. Winning hearts and minds and taking power back from central banks is difficult. It's not going to happen in 10 years. But at the end of the day, that comes down to your opinion versus mine, or your opinion versus anybody else, or anybody's opinion versus anybody else's opinion. Because there are some people who think that, Tron is going to be, worldwide currency. There are people that think that, that BitTorrent token is going to be the world reserve. There's just opinions, man. Those are investment theses, and you're entitled to yours, and I'm entitled to mine. And the market's going to determine who was right and who was wrong because nobody can predict the future and every moment in the market is unique. 5, Bitcoin is in competition to fiat. The argument that Bitcoin could replace fiat is nonsense. The entry into Bitcoin, if a new investor wants to purchase some Bitcoin, is by transferring fiat onto Coinbase or a similar website and making a purchase. Therefore, fiat is needed to purchase Bitcoin. If there was no way of purchasing Bitcoin with fiat, the price of Bitcoin would be at a fraction of the current price. Therefore, Bitcoin is dependent on the very thing that it is purporting to replace. If hyperinflation kicked in, new investors would still need that fiat to purchase Bitcoin. True or false? False. Because again, that question is formulated in an environment, in a mindset where there is only fiat. There didn't used to be fiat, bro. Fiat replaced precious metals, traded other mediums of exchange. Mediums of exchange switch. So there is no reason why. So yes, currently the most common way to get Bitcoin is to purchase Bitcoin with fiat, but that's not the only way to get fiat or to get Bitcoin. If somebody can send you Bitcoin, for example, if you do a job. So let's take a world, let's replace fiat and let's just put Bitcoin in there. Let's say fiat never existed and there was only cryptocurrency, right? Let's just jump a couple hundred years in the future. Do we magically need fiat to get Bitcoin? No. I go to work, I perform my job, I get paid in Bitcoin, I have Bitcoin. It's a different form of currency, man. And worldwide adoption takes quite a long time. And yeah, your point here is that if there was no way of purchasing Bitcoin with fiat, the price of Bitcoin would be at a fraction of the current price. I'm going to stop you there. The price of Bitcoin measured against the fiat that you are talking about would most likely be a fraction of the price, right? But when we're talking about what is a currency's intrinsic value, right? So what does the dollar trade against? Well, nothing. So what should Bitcoin trade against if it's going to be evaluated as a currency? Nothing. When you evaluate Bitcoin against the dollar, you are evaluating it as an asset, right? Not as a currency. So that argument makes sense for price appreciation against the dollar as a asset, but is not valid when we're talking about what a currency is. A currency, a fiat currency, is not valued against anything else. You can value something against something else, like for example, the Forex markets value certain currencies against something else, but then that is down to the speculation of investors and buyers and sellers again. So is Bitcoin's price going to be speculated against? Sure. But a currency is a currency because people use it as a medium of exchange for goods and services. That's it. And if people accept Bitcoin as a medium of exchange or as a payment system for goods and services, then there is no fiat required. And you do not need fiat to get Bitcoin. There is a website called jobsforbitcoins.com where you can go get paid in Bitcoin. Number 6, and I think this is the last question. The majority of altcoins are significantly overpriced compared to their functional or inherent value. The sentiment during the altcoin boom of Q4 2017 and into early 2018 was that blockchain technologies would revolutionize our daily lives. Many altcoins published their vision for the future. In reality, very little of that vision has been realized. Has XRP delivered on its vision? Has Tron delivered its vision? Is the utopian vision for the top alts already priced in against a backdrop of failures against that utopian vision? Again, this is speculation. It's been literally 1 year. A little bit longer than a year. So about 18 months since the last altcoin boom of 2017, but we've had many booms in between them. Again, we're just kind of coming off of one, actually. If you go look at the altcoin market, the last month or so, we've been in actually 2 months or so, we've been in a downswing. But prior to that, things shot up a couple 100%. So that's just market cycles. But, I'm gonna deign toward overall agreeing with you here. I think that there's a lot of hype about altcoins, but it just comes down to what they actually follow through on. I mean, yeah, they're pretty new, man. Bitcoin hasn't, as we already talked about, has Bitcoin replaced fiat as a world reserve currency? No, but it's 10 years in and we're working on it, and sentiment continues to grow every day. Bitcoin's price continues to grow every day. More people work on Bitcoin every day. We get better developers every day. New projects, products, and services continue to be created every day. And honestly, there's a lot of development in the altcoin market space actually right now. Now, am I more bearish on altcoins than bullish on them? Some, mostly, yeah. But that doesn't mean that, again, we're coming down to speculation. It's kind of like asking an oil tycoon in the late 90s that they saw the value of what Facebook and Google were building, right? I mean, a lot of these questions, which are good questions, but a lot of these questions are based on the current paradigm, which we're going to talk about how paradigms shift in the next segment. So hopefully this was helpful to you. Hopefully I answered the questions well. These are my personal thoughts and opinions. They're not meant to be static and absolutely correct and 100% right, but that's my answers, man. Okay. Thank you, Ash. Highly appreciate it, man. Okay, so let's get on to the last segment. Ray Dalio, I quite like Ray Dalio, even though I disagree with him on social issues, but he's a very, very smart man. Ray Dalio published a new link. Again, this will be linked to in the show notes. Paradigm Shifts by Ray Dalio. This is a long read. This is quite a long read, but I think you all need to read this. This is very important to read, and there's a lot of fantastic information in here, man. A lot of fantastic information in here. So, let me sum this up. These are just my thoughts after reading this article. So most investment strategies tend to be built upon the current paradigm of economics, right? The current way that minds are shaped, the way that people think that things work, because that is how things have been working. And there's nothing wrong with that. That makes sense, but it's often the worst thing to do. One of the worst things investors can do is build their portfolio around what would have worked very well over the last 10 years, over the last decade. Because as Ray points out in this article, about every 10 years in the United States, we tend to move into a paradigm shift in the market where what worked very well for the previous decade now begins to work inversely. This is why it is critical to build an investment portfolio and an investment thesis that does well in all market conditions. Diversification, as I say many times, is the foundation of strength. So over the last 100 years, because the paradigm shifts in the American market economy have been so dramatic, anyone who held all of their wealth in any asset class you could name would have lost almost all of their money at one time or another with the ebbs and flows of the market cycle. Now, there are only two ways to outperform the market. You have to time it correctly, i.e. sell the top and buy the bottom, or build a diversified portfolio that stands the test of time and does well in all market conditions. So the paradigm that has been built over the last decade really began at the end of 2008, 2009, after the financial crisis. Risk premiums were very high, interest rates hit zero, and central banks began aggressively printing money and buying financial assets, stocks, bonds, what name you. Now, investors took the money that they got from the central banks, so investors sold financial assets to central banks, and they used that money to buy other financial assets, other stocks, other bonds, other securities, other derivatives, and that pushed prices up across the market globally, and it also pushed down risk premiums. This caused prices, asset prices, equity prices, this caused prices to rise a lot, which widened the wealth gap between the very wealthy and the poor, as it is typically wealthy individuals who own financial assets and benefit from their price appreciation. Simultaneously, automation around the world and globalization led to suppression of wage growth, which increased company and bank revenue and widened that wealth gap even further. Due to this wealth gap widening, populism began to become popular in nations around the world. Now, in the current state of the market, asset prices are very high. The stock market is at an all-time high. Price is growth, so baked in to analysis. Price or growth is priced to remain strong, and inflation is priced to remain low. This is the model that is currently being priced into investors' minds when they're formulating their plan for the next decade. However, as I've already talked about, and as this report outlines, paradigm shifts tend to occur about every 10 years in the United States economy. Quantitative easing, which is central banks printing money, quantitative easing is having less of an effect on the American economy. Interest rates cannot be lowered much more or kept at these suppressed levels. All of that extra money that is being pumped into the economy is being used, to buy other financial assets, which continue to push up prices. This is an unsustainable cycle. This is an unsustainable system. As it is, we're already seeing expected returns and risk premiums of non-cash assets like stocks, bonds, derivative securities are being driven toward the cash return, which means so that's important to understand. So as interest rates are kept low, what does interest rates being kept low mean? Interest rates being kept low means that the central bank is helping debtors out as opposed to creditors, because interest rates is the interest that you pay on debt. So when interest rates are low, it means that capital debt is very easy to acquire. It's very easy to get loans. Car companies are pushing cars at you. Companies are taking on big loans, taking on big leverage. They're making new additions. They're building new products and services. They're hiring new teams. And we have generally, when this is done right, because there's nothing wrong with debt, debt is good. Debt can be good, let's put it that way, when managed appropriately. Debt allows you to expand your business. Debt allows you to invest. Debt allows you to do a lot of things. And as long as you invest wisely and manage your debt agreement wisely and pay back your debt, you're good to go, right? Debt allows wealthy people to get wealthier generally. But when interest rates are kept low, then debtors, people who loan money out for interest, are not getting a lot of return on their investment, okay? This has an effect on the market because it pushes returns on debt closer to the cash return, which means you take on risk when you loan money out. When you and the way that accounting works is when you loan money out, let's say I make you a loan, you watching this, I give you a loan for $1,000. Well, you now have a $1,000 liability in the form of debt, but I now have a $1,000 asset in the form of your obligation to pay me back, okay? And I can sell that obligation to somebody else who is willing to take on the risk because there's generally interest, because I'm going to charge you interest. Let's say I give you $1,000, I'm going to charge you 13% interest, meaning you need to pay me back $100 plus $13, right? Or $1,000 plus $130, right? It's more than that because it's compounded over time, but you get the point. So that is a steady passive form of income. So for somebody like me who say I have $10,000, I want to stick that $10,000 somewhere so that it returns me money. I get passive income off of it. Well, if I can loan that $10,000 out to somebody who's going to pay me 13% interest, that's a great deal for me, because now I'm making that 13% annualized compounding over time, plus my payback on the principal. So it's just nothing but profit for me, right? As long as I as long as I'm comfortable with assuming the risk of having an asset that is your obligation to pay. I have to trust you. Wally, man. Wally, GBU Wally, Shout out to Gunbot University, my good man. Throwing down the bands. He says $10 right in the pot, my good man. Thank you so much. He says, my interest is pushing Kraken crypto and big green candles. CC helps me understand the value of a red candle, man. Love you so much, brother. Learn, earn, and don't get burned. Shout out to you and all you do over there at Gunbot University, guys. I think that discount code is still applicable. If you guys want to go check out Gunbot University, use that coupon code Kraken Crypto at checkout. I think you save some money, man. All right. When interest rates are low, it is not good for me as somebody willing to loan out credit and take on risk. And it also means that the debt market, so anybody that is willing to buy debt, so say I need cash right now, I'm not cool with the asset, I'm gonna find an investor and I'm like, hey, check this out. I loaned Wally over here $1,000 at 13% interest. So, it's like this much paid off. I'm willing to sell you that for this much cash. Just give me my principal back, and then you can have this payment and get the rest of the principal back. That's a good deal for him because he was looking to park his money somewhere to earn money. So that money just gets parked with me. I get my investment back. And now I'm not making passive income on the debt, but now I don't have an obligation. I don't have a liability, right? I just have cash. So as interest rates remain low, the rate of return, the interest rate, the incentive for debtors, people to loan out credit, gets lower and lower and lower and lower and lower. And as it gets closer to the cash return, which means the same return on investment as just sitting in cash and not doing anything, why would investors, why would creditors take on risk to take on debt or to loan credit out, to take on liability and give you debt, which you want to grow your business and do stuff with and invest when there's literally almost no return on it? So that is going to shut the capital flow down. That is a big, big problem, especially in the world of investing. So we're already seeing this. Expected returns on investments, on debt, and risk premiums on debt of non-cash assets are being driven toward the cash return, which means less incentive to buy debt, less incentive to buy or give credit. And investors who are interested in debt, which is the majority of money out there, investors will look to alternative forms of money. Because if they're not getting a return on cash and they're not getting a return on non-cash assets, they're going to look for an alternative form of currency, such as gold or other stores of value. Might I say Bitcoin personally? This is not coming from Ray. He doesn't like Bitcoin, but because they'll do that because real and nominal returns on investment will continue to decline due to the central bank continuing their policy of quantitative easing. So as pumping cash into the system ceases to work well, central banks only have a couple other tools at their disposal. You have to understand that central banks are, we know that they're not good. Do I think that they're like absolutely evil Illuminati lizard lords? I don't, right? They're a tool that is utilized in a way they can only do certain things. They have control over interest rates and they have control over money printing. Generally, they try to keep the status quo the way that it is, but they can't just they don't have magical powers. They have tools. We know what their tools are, and we can figure out what tools they're going to use and what methods they're going to use. We can form an informed opinion about what is likely to come during the next paradigm shift as an investor, as a trader. So, the other tools that the central banks have at their discretion rather than interest rates is currency depreciation, for example, right? So contraction, depreciating the currency, inflation, a lot of that stuff is done. We can already see that currently happening in China for them to kind of sidestep around the tariffs leveled by the Trump administration. So Ray Dalio points out in this article that central banks' monetary policies are often the main driver of paradigm shifts in the economy. And by looking at that pendulum that swings between, as I explained, interest rates low, debtors are doing very well because they're not paying a lot of interest on their debts. They're able to pay back their debts very quickly, and swinging that pendulum to the other side, helping creditors out, giving an incentive for creditors to loan out debt, meaning interest rates are high. So creditors are earning a lot of interest rate of return on their investment, right? So, this is an important distinction. I'm probably going to get lumped in as an Illuminati right now. But, higher interest rates are good for me as an investor, for you as an investor. See, most people are not investors or in the market, especially a lot of people are in crypto. They think banks bad, debt bad, revolution. Listen, Bitcoin could replace literally every form of currency in the world. We're still going to have stocks and bonds, man. We're still going to have stocks. There's still going to be companies. Capitalism is a system that works, and you still want to be able to speculate on the value of a company. We're just going to be paying in Bitcoin. Stocks will be valued in sats, okay, not dollars. There's nothing wrong with speculation. There's nothing wrong with debt. Debt is natural, okay? You need debt so that you can take money from me, my money right now not doing me anything, so that I can give that to you for you to do something with, and so that I can make a return on my investment. That incentivizes me to give you money and is good for me and is good for you as you begin investing that same money. It all comes down to trust. It all comes down to debt, man. There are right ways to handle the system and there are wrong ways. The only problem is right now, what we're doing is unsustainable. We're going to have a big correction, right? That's unavoidable, but it doesn't mean you throw the entire baby out with the bathwater, right? Bitcoin solves a lot of those problems by getting rid of a central bank that can do what they do. But I digress. So we have to look at that pendulum swinging between low interest rates, helping debtors out, and high interest rates, helping creditors out. And by predicting that pendulum seeing what is natural to see as we move forward, so we see what is natural as the paradigm shift switches in the next decade, there will be, hold on a second. Okay. Yeah, right. Just noodle out what monetary policy is going to come in the next decade. Because again, as I said, monetary policy is often the driver of the paradigm shift. So in summary, in this article, Ray predicts that in the next few years, central banks will run out of stimulus to boost the markets and the economy when the economy is weak, which it is. And that there will be an enormous amount of debt and non-debt liabilities, such as pensions and healthcare liabilities, for example, that will not be able to be funded with our currently existing assets or valuations of our assets. This is completely unsustainable. I mean, healthcare, especially if we go to a one-payer system, is unsustainable. So when we see interest rates, this is kind of going to be the canary in the coal mine, according to Ray. When we see interest rates pushed so low that investors holding debt dump that debt to move into other asset classes or stores of value to get better returns, combined with a very large need to fund liabilities like healthcare, we will see what Ray calls a big squeeze. A big squeeze. So right now, $13 trillion in the American economy worth of investors' money is, and this isn't like the government, this is investors' money. This is people's money, okay? Some are really wealthy, some are okay wealthy, and some are pensions, funds, insurance funds. This is real people's money, okay? Companies are filled with people. People rely on this money. $13 trillion is being held in zero or below zero interest rate earning debt. That is not, you can't do that. You can't do that. If you're going to have debt, you need to provide an incentive for investors to earn a return, or they're just going to pull their money out, and that collapses the system. You can't have interest rates at zero. That you can't. So that means that money is producing zero income for those investors. They're literally holding their cash and being eaten up by inflation. It's not good for you. I wouldn't recommend you do that. Don't stick your money in the mattress. You're losing on inflation. So they are at best, that money that is sitting at 0% rate of return is just a safe place to hold your principal, right? Debt currently is an okay, safe place to hold your principal with no rate of return. But why would you, just ask yourself, would you, if I told you, hey man, you've got this cash, you could do something with it, but you just need to stick it right here and it's going to be safe, but you're not going to earn anything on it. Well, you'd rather take a little bit of risk and earn money on it. So this will make future returns reduce, which investors will not make a move on until it happens, right? Again, the theory of this entire article is that investors are slow to move, that it's only until they feel the squeeze that the herd tends to move in a mass. Because most are terrible at planning for the future. Most investors are terrible at planning for the future. They rely on what's worked well over the past 10 years, and it's only until they feel that pot boiling up underneath them that the entire market tends to move in mass as a herd. And this is why we have such dramatic and sharp dips, crashes, in swings. So all this to say, I don't think it's going to happen right now. I think we've got some time, but we do notice these paradigm shifts just about every decade. So all this means is that you don't have to run out. You don't have to run out, stick all your money in gold, stick all your money in Bitcoin. You shouldn't have all your money in Bitcoin anyways in the first place. But, according to Ray, and I agree with him, the squeeze is coming. Central banks cannot continue to keep interest rates at zero. We cannot have $13 trillion and zero return rate. Inflation is eating it up. We have a weak economy in the first place. I don't care what Trump says. The economy is weak. It is only quantitative easing that is boosting asset prices. There's too much money in the system, and we have too many unfunded liabilities, such as healthcare and pension plans, and all of that is going to come to a head. Now, does that mean it's going to be the end of the world, like all these doomsayers are saying? No, it doesn't, right? I'm bullish on humanity. I'm bullish on the American people and all economies around the world, for the most part, to be able to sustain this, take it on the chin and keep moving forward. But it's going to suck. It's going to suck for quite a while. It might be 10, 15, 20 years where, you have very diminished asset prices. Does that mean that you should just cash out your entire portfolio, try to time the market? No. Continue investing, continue saving, continue being wise. But if you're all invested in one particular asset class that is potentially very susceptible to this, like stocks, for example, doesn't mean sell all your stocks, but it means diversify your portfolio. Especially design an investment strategy that is going to fit the next paradigm, right? The next market cycle, the next shift. And then be prepared to switch that, because paradigms don't last forever. Paradigms last about as long as till you feel 100% comfortable, and then they switch on you. So with that being said, guys, thank you guys so much for joining me for another exciting episode of Breaking Bitcoin Market Update. I've been Justin Wise, your host, lead analyst, and senior mentor at crackingcryptocurrency.com. I'd love to see you guys join us in our Discord, which is free and available for everybody who is a trader, investor, enthusiast. You could just be a dude off the street or a gal off the street. Come on in, guys. We'd love to chat with you. It's as much about the continued conversation and community as it is about the show and what we do here. So you guys can join us at discord.crackingcryptocurrency.com. If you guys would like to join our group, learn how we trade, learn our rules, and use our tools, you guys can head over to premium.crackingcryptocurrency.com as well. I will see you guys tomorrow at noon for another episode of Breaking Bitcoin Market Update. If you guys want to check out the podcast, this show is available live at breakingbitcoin.money on your favorite podcast catcher. Again, that's breakingbitcoin.money for all current and past show notes. If you guys want to support the show, make sure to like, follow, share, subscribe, and engage in the comments section. If you have any questions, comments, concerns, sarcastic remarks, and or death threats, that is where you want to put them, in the comment section of the YouTube video. And if you do that, you could earn some crypto. I will see you guys tomorrow. And until then, trade safely. And I wanted to give a big thank you so much, Adam. Thank you so much for the fantastic questions, my good friend. And thank you so much for the 10-pound donation, my good friend. Hopefully you guys have a fantastic day. I'll chop those videos up and publish them on YouTube and Twitch. You guys have a fantastic day.